Hey, ladies and gentlemen, welcome aboard High Probability Market Strategies, and specifically to this part of the ebook where we're going to talk about potentially profiting on a trade war with China. Not only a trade war going in, but more importantly, a trade war going out and getting bullish long-term on China. Very fired up for you guys to be listening to this presentation today because I'm going to show you that trading is a form of combat. There's a winner and there's a loser, and here at Top Gun Options, I put my members on the right side of that trade. As I said, welcome aboard, ladies and gentlemen. My name is Matthew Buckley. You can call me Whiz going forward. I flew the FA-18 Hornet for about 15, 16 years for the United States Navy. I graduated from the Navy Fighter Weapons School that many of you know as Top Gun, and I was also a bad guy pilot when I was out at Top Gun. I was an adversary pilot where our jets were actually painted in FSU, former Soviet Union colors, and we would fly bad guy tactics against our good guys. As a matter of fact, some of the flying that I did included flying in a bad guy or good guy, depends on the day of the week, jet over Pakistan. I got to fly with the Blue Angels when one of my best friends was on the team as the lead solo, and was also an LSO, a landing signal officer. So when I wasn't flying, I'd be on the back of the ship, day, night, bad weather, trying to help my fellow aviators get on board. And I also flew 44 combat sorties over Iraq. What's this have to do with trading? Everything. I essentially went from the cockpit to the trading pit. Back in the day, way long ago, I taught myself how to trade stocks and found out what options were, and I more or less never looked back. I always grew up believing in service above self. I was one of six lower middle class Irish Catholic kids born in South Philadelphia and South Jersey, raised down there in South Jersey. Was always interested in finance, though. You don't join the military to get rich, obviously, but joined, loved the ocean, loved aviation, wanted to serve my country, so that's how I ended up as a naval aviator, as a Navy fighter pilot. But always in the background interested in finance, and as I said, before Al Gore invented the internet, I taught myself how to trade stocks, and then once I found out about options, I never looked back. Why? Everything that I was learning flying a fighter aircraft, having a strategy, implementing tactics that support that strategy, managing risk, contingency planning, knowing when to get out of a good or bad situation before it got worse. All of those things I applied to my trading with absolute incredible success. So well that I actually popped up on the radar of one of the largest options trading firms on the face of this planet, headquartered right there in the Chicago Board of Trade. During my time up in Chicago, I had a blast. Helped build a hedge fund, helped build the retail brokerage options house, and like I said, going from a lowly retail trader all the way up to the Chicago Board of Trade, I felt like Valentine in trading places. But I had a blast. I was the managing director of strategy of a $2.5 billion equity volatility arbitrage firm. And also I was the founder and CEO of the Options News Network, ONN TV. We were more or less the CNBC for options. I know John and Pete fairly well from my time in Chicago, and they do a great job on CNBC with the, but CNBC pays lip service, folks. Even Fox Business News doesn't really pay that much attention to options. I do, and that's why the Options News Network was so successful. Got to be honest with you, love the people in Chicago, love the steak, love the food, everything like that. You can keep it though, man. In February, it's like a survival situation getting from the Board of Trade down to the train station to go home. So I decided to pick up the squadron, and we moved down here to South Florida in 2010, and that's where my squadron currently resides. And Top Gun Options has been in business. We're going on 8 years at training literally thousands of investors and traders of all skill levels, from Marine buddies that can't even spell the word options, I kid, all the way up to people who think they're Jedi masters. Just like Top Gun, you think you're good, we'll make you better. So our methodology ain't rocket surgery, folks. Most of you listening to this ebook right here are very tactical traders. What do I mean by that? Right? You wake up in the morning, you put on your bunny slippers, have a sip of coffee, and you watch Mr. Wonderful on CNBC, or you watch some dude in a nice suit just beat the drum to get bullish on Tesla, and yeah, okay, guy's got a good suit, good looking dude, I'm gonna listen, and then a week later you're broke. That's just not smart, folks. So the way we trade here at Top Gun Options is SOT, strategic, operational, and tactical. So in the 4 live trade briefs we do Monday through Thursday, every day at 1 o'clock there, I give about a 10 to 15 minute strategic brief. I treat you like you're an admiral or a general sitting there with your cigar getting your intel brief. I give a global economic outlook. What's going on with the EU? What's going on with Greece or Italy debt? What's going on politically around the globe? A Brexit? What's going on militarily? A Syria, a chemical weapons attack? The president sending our fleet through Chinese, what is now China considers their territory in the middle of the Pacific. That just ain't going to work. So you have to have what we call SA, situational awareness as to what's going on around the globe. Then we can do what I call peeling back the onion and get operational. We can take a look at what's going on domestically here in the United States. How were earnings? What's the Fed doing? Are we going to keep cranking up interest rates, or is the Fed going to crank them up a little bit and then sit on their hands? What about the political picture, the impact of the midterm elections? What's going on if we have gridlock? All of those things we're going to take a look at during the next 10 to 15 minutes of a live trade brief. And then, you ready for this? Only then can we get tactical and trade. As I said, many of you don't look at the first 2 parts of that big pyramid, man, and they are absolutely critical. Years ago, how many of you even cared about Greece? You did care about Greece for about a month as the Greek debt crisis roiled markets. What about Vladimir Putin invading Crimea and eastern Ukraine and shooting down a civilian airliner? That impacted the markets. Donald Trump lobbing 59 cruise missiles into Syria. All of these things impact the market. And that's what I teach here at Top Gun Options. Started with Whiz month to month, and after 2 months, I realized Whiz was the real deal and went annual. He knows the ropes of the market. Keep printing money. Thank you for a better way of life. I'm not going to kill you with testimonials here. What I am going to do is jump in to the markets right now and take a look at how we can potentially profit on China. Like I said, instead of having testimonials, folks, I'd rather actually do a trade here. As I shoot this ebook, it was a comical day. And here's what I mean by this. The president, or it was rumored, this is a Friday morning, it's November 2nd. Friday morning, there was rumors that the president, and obviously Tuesday of this week, let me take a look here. Tuesday of this week, the president allowed the cynic in me to come out. You ready for this? Right before the midterms, the president says, hey, I picked up the phone, I called President Xi. Xi and I, good friends, go way back. Huge. Going to have a huge trade deal. Everything's good. And then we saw this kind of rip your face off relief rally. I told my members on Wednesday and Thursday, I said, do not believe this. This is a short squeeze, as Morgan Stanley followed up 2 days after I said it. This was a short squeeze, and I'd sell into it. So the president trying to prop this up with, hey, we're going to get a trade deal. Because that's one of the big overhangs in this market right now, folks. And that's what we're going to talk about when we get tactical in a couple minutes is we will, it's not a matter of if, but when, we will get a trade deal done with China. And that's overhanging the market right now. One of the reasons we're down here. Don't get me started about the Fed, right? Well, let me get started a little bit. One of the reasons that we had this market sell-off, and this wasn't panic, folks. I told this to my members as it started. I said, this ain't panic. Panic in stocks? The options signal no. I told all of my members this. I said, hey, man, remain calm. This is mom and pop retail trader heading to the door. This is not institutional selling. You haven't seen panic selling. Trust me. I was in the CBOT, Chicago Board of Trade, when the VIX hit what, 80, 90 during the financial crisis. This is nothing, ladies and gentlemen. If you panicked during this, you're doing it wrong. And at the end of our little brief here, I'll show you how you can just take a 2-week test flight for the price of a really bad bottle of Pinot Grigio, and I'll show you all this stuff. But this wasn't panic. One of the things that's overhanging this market as well right now is the Fed. Now, Barack Hussein Obama, for 8 years, had near 0% interest rates, and he had a Fed, Ben Bernanke at one point, the Fed chief at the time, was pumping $85 billion into the market with what? QE, quantitative easing. It's a fancy word for liquidity. My 10-year-old daughter, Keely Grace, could have an up stock market or an average economy with the Fed giving you near zero interest rates and pumping money into the market. Now the president, love him or hate him, is right to be kind of throwing the Fed under the bus a little bit. Not only are they talking about really cranking up interest rates, they're also, they have a near $5 trillion balance sheet. So all that money they printed, Ben Bernanke in the back of his Lincoln Town Car in Washington, he was running out of printer ink, printing money. Folks, he put that into the market. The Fed has to unwind that balance sheet. So raising interest rates and unwinding the balance sheet at the same time, the president used the words crazy. He's a New York real estate developer, folks. There's no filter. What you see is what you get. I agree with it. The Fed is crazy to be doing that right now. So mom and pop retail trader stampeded to the door. And listen, let me give you a little whizism here. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. As I just said, near zero interest rate under Obama, stocks grew. Rising interest rates, money's more expensive, stocks ain't or companies aren't going to be buying their shares back, stocks are going to go down. Well, who was the number one buyer of the S&P 500 in 2016 and 2017? Now, obviously, you guys can't answer. My live trade briefs you'd answer, but the number one buyer of the S&P, no, it wasn't the Fed. I can hear, I can read. I'm a Jedi master. I can read some of your minds, right? No, it wasn't the Fed. No, it wasn't hedge funds. No, it wasn't you. The number one buyer of the S&P 500 for the past 2 years has been the S&P 500. Companies doing what? Buying back their shares. So that's going to be one of the things that is going to help this market recover a little bit, is with this nice big pullback here. If you loved Amazon, for example, up at $2,100, you love it down at 15, right? You love it even more. So share buybacks will help us a little bit. And the Fed raising interest rates in December, it's near certain, but we need to look to their language, okay? So that's a quick and dirty strategic brief. By the time you guys see this video, the election will already be over with, and here's my prediction. If the Democrats take the House, we'll get a one-day, oh boy, it's going to be gridlock pullback, and then it's a rip your face off. We get back on the horse and gallop higher. If the Republicans win the midterms, it's a rip your face off rally and back on our horse here. Okay, so let's take all of that out of it and let's get to what was funny today. So earlier in the week, the president said, and again, the cynic in me is because the president, a guy who owns this on the way up. I haven't seen in my lifetime, in my 40 blank years on this earth, I've never had a president who tweeted or talked, for that matter, about the stock market. Up, down, this. The dude is, if he owns it doing this, he certainly he certainly owns this move. This is why he's pounding Fed Chairman Powell, saying he's crazy for raising rates and unwinding his balance sheet. And he also picked up the phone on Tuesday and called President Xi. So we got a little bit of a relief rally on that. And then what happened today? Today was comical. The news reported that unnamed sources, shocker, said the president told them to prepare language for a trade deal with China. What happened at noon today, which was comical, was Larry Kudlow. Larry Kudlow used to work for CNBC. The president pulled him away from CNBC to come and be the market whisperer. Right? He was brought to literally during, what was it, the last swoon over here in, what was it, February-ish or something like that. Larry Kudlow was on the White House lawn a couple times a day. All is well, everything's calm. Today at lunch, he's on CNBC saying, yeah, that's complete fake news. The president didn't tell anybody today to get ready for a trade deal, or no, that's fake news. China hasn't done anything. They haven't given us any serious, and we're not even talking. Last week, folks, the president was sitting in the Oval Office saying, "We're not even. I'm not even talking to those guys. They're not serious. More pain's coming. I'm going to hit them with another broadside of sanctions or tariffs." Today, huge. Going to get a trade deal done. So this morning, trade deal, market rallies. Noon, Kudlow says, "No, that's false. We're not even talking to these guys." Literally, I waited to shoot this video because I wanted the president to get done speaking as he's standing near his helicopter going, no, that's not true. I'm going to have dinner with Xi at the G20 at the end of November in Argentina. We're going to get a deal done. And the market rallied again. You can't make this stuff up. Why am I rambling about all this stuff? Well, first of all, it's not a ramble. It's me giving you what I call commit criteria. Why would I commit capital to a trade? Take a look at the iShares large cap ETF, the large cap China ETF that I use to trade China. It's called the FXI. Foxtrot X-Ray India. For the last 6 months, TGO members and I have been pounding this thing into the dirt. Look at that. Every one of these little pops, I can name exactly why it popped. People's Bank of China got involved in capitalism in both these places. The market, the Shanghai, the Chinese markets were imploding. The PBOC did what? What Ben Bernanke did under Obama, pumped the liquidity in the market. Whenever a government entity like the PBOC or the Fed pumps money into the market, it's an initial sugar high, folks. The market goes, yay, yay, liquidity. And then they stop and think and go, whoa, whoa, hold on. If the central banks get involved here to save capitalism, that means it's worse than they're telling us, holy crap, sell. So that's what happened in each one of these. Then this one was the president going, you know what, we'll get people sitting down. Let's talk. What happened? We sent, I think, our deputy secretary of making coffee, and they sent their similar type of deputy secretary of making coffee to talk. The guys left that meeting and said, yeah, we didn't agree on anything, and we didn't even agree on when we're going to talk again. So since that time, this little pop right here, this was the president doing what? Ripping apart NAFTA and doing a deal with Mexico here and Canada here. So the FXI rallied on, hey, maybe he'll get a deal done with China here soon. Nope. We sold into every one of these pops on FXI and printed money. Had an absolute blast. Now look at what happened this week. Picked up the phone, called G. Nobody does deals better than me. We got a deal in the works. Market didn't believe it. And now look at today. Let's look at the round trip the FXI made today. Here's the open. Oh, yeah, huge. We're going to get a deal done. There's lunch. Look at what happened. This is when Larry Kudlow started talking. No deal. We're not even talking with these guys. And then here's the president's remarks in front of the helicopter. Now, why am I showing this to you tactically? Because I'm about to put on my binoculars, stand up on the bridge of the USS Top Gun Options, and we're going to do what? I'm going to hop in my time machine, and I'm going to fly all the way out to January of 2021. Why? Because I am long-term bullish on China. Right now it sucks, folks. We had a GDP, what, 6.5? 2-3 weeks, it seems like a year ago. 2 or 3 weeks ago, the Chinese GDP came in very weak. And then this week, we got Chinese PMI numbers that were close to a 50. Now, whenever you see or hear a PMI number near 50, it means contraction in the economy. So the where is it? The Chinese PMI right here, it was near a 50 right here, 50.1. Anything below a 50.0 means recessionary economy. This not good. So the Chinese want to get a deal done, folks. Period. That they're and they don't know how to read this guy. One of the reasons I believe they haven't come to the table with anything is they just don't. You know, love or hate the president, he's playing, you know, four-dimensional chess while the Chinese are sitting there, you know, learning how to play checkers with this dude. Here's my strategic mindset. And it sounds like the president's wanting to maybe get a deal done by the G20 or at the G20, so we can come out to the microphone, shake hands, and say, huge deal, and we're back off to the races. Like I said, the president doesn't want to own a down market. He doesn't want to be the reason or a trade war. But at the end of the day, fair trade is good. Who was it? The president of Poland, well, like a month ago or something like that, you know, hey, he's given, whoever the president was, he gave something, and somebody's like, well, why'd you agree to negotiate or do better terms? He's like, well, nobody ever asked us. Translation meaning, in the past, the United States has just kind of gallivanted around the world, sprinkling money at people, hoping they'll love us. This president, he's turning that off and saying, no, man, we've been, I love the way he talks about President Xi Jinping, too. He says, hey, man, I don't blame you. If I could have taken advantage of you for the last 40 years and gotten a better deal for my people, I would have done it. So good on you. Those days are over with. So at the end of the day, net, we get a deal done with China. It's bullish for the United States, and I think it's going to help the Chinese economy because they've been getting pounded by these sanctions, guys. So there is my strategic mindset and my commit criteria, all in one little 3 to 5 sentences. So what am I going to do? I want to be essentially, instead of going out in time or not in time, instead of, you know what, Whiz, you had me at, we're going to get a deal done with China. I'm bullish on the FXI. Maybe I just buy 1,000 shares of the FXI. If you did that, folks, that would tie up 4160, nearly 42.2. If you want to tie up 42 grand, knock yourself out. I'm going to teach you right now an options tactic that you can use that is called synthetic stock. It's going to act exactly as if you own potentially 1,000 shares of FXI, but it ain't going to cost you 42 grand. It's going to cost you a fraction of that. And you can deploy, if you were going to buy 1,000 shares of this, I just saved you, at least 35 to 40 grand of that you could deploy somewhere else. So let's take a look at this. Here's how you create synthetic stock. And like I said, at the end of this video, I'm going to give you a link where you can take a 2-week test flight into what we do here at Top Gun Options, because we have 8 training sessions. They're about an hour to an hour and a half each. So I take an hour to an hour and a half just to go through this tactic. But I don't want to chew up too much of the clock here, but here's what we do. The term synthetic stock simply means this. You don't own the stock. So you don't get to vote. I could care less. All these, Carl Icahn's got a quadrillion votes and you have your one. Your vote means nothing as a shareholder, by the way. So you don't get to vote with synthetic stock. And you also don't get a dividend. So if you're massive Joe or Jill, I only do and then whatever. I don't trade or care about dividends. So synthetic stock means you don't own the stock, which is great with me. I don't want to be out 41 grand today. I'd rather be out what we're going to talk. If you know anything about options, you know that if you buy calls, you're bullish. So the FXI right now, as I record this, is at about 41 bucks. So I've gone out to Jan 21 and I'm looking at the 41 strike. That's the closest to 41.17. If you know anything about options, and even if you don't, you probably know that, all right, if I'm bullish on the FXI out to Jan 21, Whiz, I could buy some calls. And you'd be right. You could buy 10 of the Jan 21 41 calls, and you could throw them in your filing cabinet until the president comes out to the microphone and says, huge deal done, and this thing rips higher. So if you just bought these calls, you'd be out 5,200 bucks. And you have what? Unlimited upside, right? Your max risk, all you could lose is what you paid for these calls. And then obviously you got Buzz Lightyear up here as your max potential profit to infinity and beyond. Notice what I did, and this is habit. I didn't even point out that I did this, but you should have seen what? If when I clicked on this little analyze button, your eyes went to max profit, you're wrong. I'm like a Catholic nun. I'm going to crack your knuckles. I'm going to teach you a Top Gun Options. You never look at max profit first. You always look at max potential loss first. Why? A fighter pilot, an options trader, a doctor, an attorney. You always look at what is the worst thing that can happen to me on this mission or in this trade. If you're not okay with this, either don't do it or don't do 10 contracts, right? So awesome, Whiz, I get that. I could buy some Jan 21 China calls and these could print money. Yep. But if you're really bullish on China, like I am, out a couple years, you could also sell some puts. Buying calls is bullish. Selling puts is bullish, right? So now take a look at this. Just look at this picture over here on the right. Don't look here first. You see this picture? This is investing or stock 101. This P&L graph is what? Long stock. If you bought 1,000 shares of the FXI today, that's what your P&L looks like. FXI goes up a buck, it goes up a buck. I'm a political science major and knuckle dragging F-18 pilot. I get that. So look at this. Just by using options, I'm synthetically long the stock. Okay? So whenever you buy a call and sell a put with the same expiration, Jan 21, and the same strike, 41, you make synthetic stock. All right, now we will look at this. Holy crap, Whiz, I thought you said, if I did this options things, I wouldn't be out that much money. Here's the deal, folks. What is the risk of this trade? The risk of this trade is the same as if you're long stock. The FXI going to what? 0. Will it? No. Can it? Yes. Will it? No. If the FXI goes to 0, folks, we're in World War III. It ain't. So, but it doesn't matter. I can't pick up the phone, even though I help build options house. I can't call the risk management department and say, hey guys, it's Whiz. What's up, Whiz? Yeah, come on, man. The FXI ain't going to 0. Don't haircut me. It's called margin me with that. Come on. Click. They'd hang up on me. So what can I do? If you know a little bit more about options, what can you do? You can buy what I call a protective put. So if the risk of this trade, as it's on the screen, is the FXI, this blue line imploding and going to zero, why don't we say, hey, options house, I'm going to buy a downside protective put. I call it a disaster put, a protective put. What would be a disaster? Here's how I define a disaster. Or what, you guys all should know this, what does the market heavies call a bear market in a stock? It's down 20%. So if the FXI, let's just round down and say it's at 40. 10% is 4, 20% is 8. Below this, let's just take a look. Let's see if they have a 43 or 42 put. Oh, they do. There you go. It's on the screen. So I'm going to buy 10 of the Jan 21 42 puts. So check out this sorcery or wizardry, pun intended, that I just did. The risk to the original trade was 41 grand-ish. Check it out, baby. 4,800 bucks. Instead of my max risk being 41 grand, it is now 4,800 bucks. I'm pausing for effect to let that sink in. Isn't that freaking cool? By just placing a disaster put underneath this, we hedged our trade. So look down here. We're coming out of pocket on this trade, 57.70, so about 5,800 bucks. And again, folks, if you don't want to come out of pocket that much, or it's a little much, I don't know, do 5 contracts. Again, I'm like at the disclaimer at the beginning, I'm not a registered investment advisor. I don't give an investment advice. You have to talk to an RIA, registered investment advisor, or a broker dealer about any of this stuff before you ever put any real capital at risk. But take a look at this. If you did 5 contracts, you're at 2,400 buck potential max loss and coming out of pocket 2,900. Good stuff. I'm okay with 10 contracts on this trade. But here's what I'm also going to do. For those of you that are semi-familiar with options, you know, or maybe you learned about options because you own stock and you sell calls against it. That is known as a covered call. Many people kind of dip their toe in the options water because they own stock, and somebody like me, a good buddy there, says, hey man, why aren't you own 1,000 shares in IBM, why aren't you selling some front month calls against it to make it, you know, some rent money or a car payment? What's a covered call? That's how I got in, man. I was a young Lieutenant JG flying the Hornet out of Naval Air Station Lemoore, California, and one of my squadron mates was a financial advisor for like 2 years when he got out of college, and then decided he wanted to serve his country. And he saw me trading stocks one day. He's like, dude, what are you doing trading stock? Short story long, I paid for that lunch, and it paid for the rest of my career and my life because it was phenomenal. So here's what I'm going to look at doing. You see this right here? What's that? 42, well, I'm sorry, 43 and a half. 43 and a half, 40. Everybody see this this triple top in FXI. Pop, 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 pop. So and actually maybe even 42 and a half. So check this out. I'm going to turn this into an even cooler trade. I'm going to add option, and I'm going to sell what I call the front month. The hell's the front month, man? You're sitting in it. November, December, these are called the, quote, front months. So I'm going to sell a front month upside call. And what did I say? Is there a 42 and a half in here? Nah, the 43. So look at this. Oh my God, Whiz, you are really doing some wizardry here. You went from coming out of pocket a lot and risking a lot to coming out of pocket 970 bucks. Now let's look at this trade. This trade, okay, and it's not displaying perfectly there. There we go. There it is. So look at this. We are potentially coming out of pocket 1,270 bucks. This tactic right here now is called a synthetic covered call. Okay, now let me do this again because sometimes as the price sell 10 of the NOV, you know what? I forgot to go through the time frame here. Like I said, President Trump picking up the phone, hey, I got a trade deal done, and then the market going, no, he didn't. President Trump today, 2 days later going, hey, Larry Kudlow was wrong, we are going to get a deal done. I'm going to go out so I didn't do a good job of briefing how far I'd go out. Probably to next Friday or maybe even November. Let's go out. Let's sell 10 of the front month. So that's the Nov 18. And let's stick with the 43s right there. Right? What did I say on the chart here? This triple top was at what? Let me back up my chart a little bit. Here we go. 1, 2, 3. So resistance right here is at 40. I'm going to round down and say 43. So now let's take a look at the correct trade here. I'd like to sell 10 of the Nov 18 43 calls. Okay? And a quick reminder of why I said the 43s. 1, 2, 3. 3 times in the past 3 months, the treated tree and a churd, watching the Blackhawks in Chicago. I love that announcer. So we have a triple top here right around 43. So I'm going to go out a couple weeks and I'm going to sell 10 of the regular November expiration 43 calls. So in this case, here's the kind of the final looking trade. We're out of pocket. This is a debit spread, about 54.40. Okay? And now take a look at the risk graph. So if the FXI is trading below 43 by November, what's the regular November expiration? It's November 16th. Remember, quick options lesson here. You see where it says Nov 18? That's the regular options expiration. If you're new to options, equity options expire the 3rd Friday of every month. So when it says Nov 18, that means the day is November 16th. Okay? And again, if that's a little confusing, don't worry about it. In about 5 minutes, I'm going to give you the link to sign up for a 2-week test flight, and I'll teach you all this stuff. Folks, I didn't hatch a good options trader, okay? I mean, this is learning, and we take a building block approach here at Top Gun Options. So check this out. If the FXI, let me close the trade here, is below 43, you see this right here? 43, there's the resistance lately. So I'm giving us a little bit of room. This can run to the upside here, which we want to do, right? We want FXI to go up. That's our underlying position. What I'm doing by selling these 43 front month upside calls is bringing in a little bit more scratch. So we make money potentially 2 ways in this trade. FXI keeps going up and FXI stays below that 43 strike before expiration. Making money 2 ways in a trade is American. Love this trade, guys. So if it expires below 43 in a couple weeks, I put $1,300 in my pocket, no matter what. And if it goes up a little bit more from here, as long as it stays below 43, I make whatever the FXI goes up during that time. And here's what I'm going to do every month, ladies and gentlemen, for the next couple years, is continue to sell these front month upside calls. The only time I don't, ladies and gentlemen, is if something goes on a tear, so to speak. Like this. You wouldn't want to jump in here and try and, you wouldn't want to jump in here and try and sell some front month upside calls. They're just going to get blown out. When something's on a tear, sit back with a glass of champagne and go, man, I'm the smartest trader in the world, because this thing's having a rip your face off rally. Remember, you're long synthetic stock, just like you own the FXI. So just sit here and print money. And then if it levels off like it did like this, then you can go back to selling upside calls and bringing in rent money. Okay? Again, I usually do an hour to an hour and a half on this tactic. It's called, right here on your screen, guys, this is synthetic stock with a protective put and a covered call. That's a lot of verbiage, but here's what I'm saying. We are essentially long the stock. I have a disaster put underneath it, and I'm selling some front month upside calls. So net, my max risk in this trade is $4,500, and I'm coming out of pocket $5,500. This is a beautiful trade, ladies and gentlemen. Huge. Love this trade. If you are long-term bullish on China, you think that we get a trade deal done and their economy gets back on track, this is the trade for you. And I manage this trade. I have one of these on in my portfolio right now, our model portfolio, in actually 2 of our portfolios. So if this interests you at all, or at least the concept, like I said, if you feel like you've been drinking from a fire hose for the past 20 minutes, good. Because what I did was kind of just drop you in the middle of Afghanistan and show you, our normal flight operations. But during our live trade briefs, I slow down. During our training sessions, it's actually conducted at night from about 7 to 8:30 on Tuesdays and Thursdays. So here's our homepage, folks. Underneath the Full Throttle tab, when you become a member, look at what we did the other night. I did an hour-and-a-half session on double verticals, which is a top secret tactic we do here. I did an hour to an hour-and-a-half on bullish spreads on CSX. I did an hour to hour-and-a-half on bearish spreads. I think that was on... I forget that was on. And then covered call. So all the academic training is right here, guys. As soon as you become a member, I would go here and start watching all of these training videos. And then we do them live every other couple months or something like that. So here's, folks, I'm going out where? I think I'm going down to Miami tonight, and I'm in 1942. I love to sip on my tequila. And I think the last time I was in Miami for a glass of 1942, it was like $60. I almost fell out of my chair. So I'm going to make you an offer right now for $38, about half the price of a glass of Don Julio in Miami. For $38, I'm going to give you access for the next 2 weeks into all 4 of our live trade briefs. So Monday through Thursday at 1 o'clock, we do live trading. You'll get that for 2 weeks. That's 8 sessions. 8 sessions, folks, for $38. That's if you have to think about that, do me a favor and don't do it, because I don't know if we're going to get along. Seriously, if that's kind of putting a question mark over your head as to whether you should do this or not, then don't. And if that's your last $38, please definitely don't. But if, like I said, this interested you at all, like, hey man, I think the short-term clouds between the United States and China will clear eventually, and then we're going to have I'm telling you, man, that's one of the overhangs in this market. The institution, like I said, this was retail trader panic, man. This wasn't institutional trader panic. Institutions bought on the way down, and institutions are waiting for Donald Trump to get a deal done with China, okay? So if you like this trade, getting long-term bullish on China, having a protective put in case we're wrong, and selling some front-month upside calls to make a little scratch every month, then welcome to Top Gun Options. This is the link you need to go to. Sorry about that. I should have maybe led with that. This is easy to remember. Go.topgunoptions.com/goflight. Just so everybody see the movie Apollo 13, right? Before they launched, they went around the room and mission control. Go for flight. Go for flight, right? Weather, go flight. Fuel, go flight. Boosters, go flight. This is you. Go.topgunoptions.com/goflight. And like I said, for the price of a bad bottle of Pinot Grigio, get airborne with us for the next 2 weeks. Trading is a form of combat, ladies and gentlemen. Somebody's going to win and somebody's going to lose. And why wouldn't you want to fly with a guy who is used to shooting targets down like that? I'm going to put you on the right side of that trade. I'm going to teach you, and you don't need any, it's funny, some people ask, I wasn't in the military. Folks, I remember my flight school class in Pensacola, Florida. One of my buddies, his first flight in an airplane was to Pensacola. I think he lived in like Wyoming, Wisconsin, one of the W states, man. He had never even seen an airplane. Another classmate in flight training had like 6,000 hours in a Learjet. I mean, the dude, but guess what? The dude flying a Learjet almost washed out of Navy flight training because they teach you what you need to know. So if you don't know how to spell the word options or any of that stuff, or you're in the least bit interested in this type of trading, I'm going to take you from embryo stage all the way up to Jedi Master. Naval aviation flight training can take somebody who's never even seen an airplane before, and in a short amount of time, launch them off the pointy end of an aircraft carrier to deliver some serious justice. Okay, I got to run. I got a weekend ahead of me. Like I said, I'm going to go get some Don Julio for $60. I'm going to give you a break on that, and you're going to get it for $38. Go.topgunoptions.com/goflight, and let's get long China and a trade deal. Have a great rest of your day. Happy hunting. Make sure you hedge, and God bless. We'll see you later.